I'm Fred Earnest, President and CEO of Vista Gold Corp. We own the Mount Todd Gold Project, one of the largest undeveloped gold projects in Australia with over 9 million ounces of total resource, a project that is fully permitted, and we are now commencing the work on a feasibility study to evaluate a smaller and cheaper way to build the Mount Todd project.
Fred, good to see you. How are you, sir?
I'm very well, thank you.
Glad to hear you. Now, well, I'm not sure the Canadians are having a good week, but you are having a good week. Stock price reacting nicely to your story.
We are having a good week.
Yeah?
Yeah. It's been great to be here at PDAC.
Absolutely. Busy out there. Very busy.
It is very busy.
Yeah. And who are you here to see? What do you want out of this week?
Well, we obviously there's a group of investors that we're trying to reach, but more importantly, this is a great opportunity for us to meet with strategics, some of the bankers, and the lending institutions. But we're focused on Mount Todd, and we continue to work to find that right transaction partner, and this is good hunting ground.
But people are reacting to the kind of the change in the strategy, right? Let's make this smaller and perfectly formed, a fundable, I guess is the word we're looking for.
Absolutely.
Right? To do that, you got to put out this feasibility study. That's what people want to see. When's that coming out?
We intend to have the feasibility study completed by the middle of the year.
Right. Okay.
Yeah, we've changed our thinking. For years we talked about Mount Todd as this
big is better,
big project, 50,000 tons a day, 17.5 million tons a year, producing almost 500,000 ounces of gold per year over the first half of the life of the project. But that comes with a price tag. And even though we designed a project that was very efficient, $1 billion US is still a big check to write.
Yeah.
And we started working last summer seriously about looking at a smaller scale. And when I say smaller scale, we're talking 15,000 tons a day. We're talking a very normal sized gold mine that would produce 150 to 200,000 ounces of gold per year over an extended period of time. And we launched the feasibility study in December last year. The new resource estimate that incorporates drilling over the last several years will be completed in the next couple of weeks. Mm-hmm. And process engineering at selecting smaller equipment more suitable for the scale that we're talking is in progress. And you mentioned this has been more widely accepted. We've seen a huge amount of interest in this size of a project, and we're very excited about that.
Yeah, it's funny just at the time when gold's taking off, isn't it?
That is kind of an interesting coincidence. Yeah. Isn't it? But there's some other fundamental things going on in the background that are none of us anticipated.
Look, and it's fine if you're a gold bull to say, "Oh, gold's only going to go up," but I think sustained gold high gold price is important too. So I think a smaller capex, it's much more approachable, doable. It's a nice starter size, and you can ramp up later if it is a high gold price environment, right?
Absolutely. We're targeting a 60% reduction in capex. We're looking for something at or below $400 million as the capex to build this project. And that all of a sudden puts it in the realm where we could finance it ourselves, but more importantly, it's within the realm of what a mid-tier company could participate in. And being smaller, it's easier to build. Equipment's easier to get. It can be built faster. Not as complicated, less risk. We just see a lot of advantage to doing it this way, and I think that the market agrees with us.
Yeah, and I think that's sort of up-to-date numbers as well. I think people have done sort of studies in the market in the last 2 years. The prices have moved. There have been price increases and continue to be. Nothing substantive, but enough to just change the dynamic and somewhat. At least with the money, type of money, right? Okay, there's the equities market, which seems very, very difficult at the moment. We spoke to a group this week who raised $50 million. A Canadian company, 60% of it came from Canada, 30% of it came from Europe. The Canadian market on equities, how do you think it feels about projects like yours? Because we'll get into funding of a capex in a second, because I think that's probably the easier bit. But how are we for cash? How are we for your own kind of G&A and overheads?
Yeah, so we ended the year with almost $17 million in cash.
Very good.
So we don't need to go to the market.
Yeah.
We've got more than enough money to fund our activities and pay for the feasibility study, and we've got a couple of years runway in doing that. So we are in a good spot, and part of that's due to the fact that we did a royalty deal with Wheaton Precious Metals a year ago. We're always very careful with cash. I mean, that's just in our DNA. But the equity markets are challenging. But I think that the right projects are still getting funded, and we're just trying to demonstrate that at this scale, Mount Todd is one of those right projects.
Yeah, in a commodity, which is very, very topical at the moment as well, for sure. So in terms of the kind of like feed getting through the FID, does that current cash balance allow you to kind of get there once you pass the feasibility study?
At some point, to get to the point of a definitive investment decision, it'll depend on the path that we go down.
Yeah.
If we end up in a transaction with a company that wants to partner the project,
right?
That's probably a lot easier. We may need some cash, but it'll be less. If we make the decision to build this ourselves, then that involves building a project construction team. Right. It's going to take a little bit more cash. It's going to take probably an extra year. Yeah. So we'll be in a position where we need to raise money sooner rather than later. But at this stage, I think both of those conclusions are a little early to say.
I'm just interested in the path that you sort of choose to kind
exactly. As we come out of this, the middle of the year with the feasibility study results, and we'll be at Diggers and Dealers. We'll obviously be at the gold shows in Colorado in the fall. But we're hoping the second half of this year is key to us in finding this right match, and that will help us define what the strategy is.
Right, and seeing a lot of M&A at the moment, but it seems to be existing ounces merging with existing ounces rather than chasing new ounces. So in terms of the kind of de-risking process you're going through with the feasibility study and the kind of setup for maybe something even bigger if someone with the balance sheet wants to do that, are you having those sorts of conversations with industry players perhaps looking to top up the resources and reserve numbers?
We're still fighting a headwind where producers are seeking to acquire producers. They want that immediate cash flow. The interesting thing is that we're seeing a broad spectrum of interest with regards to some companies are keenly interested in what we're doing right now. Mm-hmm. Others are saying, we actually like the big project.
Yeah.
And so it's kind of
where were you 2 years ago?
Right. Yeah. But it really is a matter of each company has its own style. Yeah. Even some of the companies that you would think would say we'd build this big scale say, no, we'd build it smaller and then expand it. And so, my personal view is that we can't continue to do what we've been doing. We're not discovering new mines. We're not discovering new huge deposits. And so at some point, the industry can't sustain itself as an industry unless we begin to develop new projects. And we think that Mount Todd is really uniquely positioned in that regard with all of the permits in place, being in a safe jurisdiction, and now demonstrating that there's more than one way to build Mount Todd.
And remind me, what's the total ounce number that we're looking at, measured and indicated?
The M&I is a little over 8 million ounces.
Right, so that's...
The total ounces are over 9.
Then it's one of the kind of more advanced and significant resources globally for gold, right?
Absolutely.
We were having a conversation earlier this week with someone. We're talking about the number of advanced development plays of plus 5 million ounces in Canada. So we're down to about 7. Not a lot of choice out there, and they've got their own foibles and problems with permitting and licensing and so forth. So where does this sit? Given it's in Canada, given this Canadian company with asset in Australia, where does this sit in the kind of the world play? So is it attractive to people outside Australia? Is it attractive to people outside Canada?
Absolutely. Yeah? Absolutely. I mean, the people that we've had conversations with range from African companies, North American companies, Australian companies.
Really?
It's in the project scale wise, it's in the top 30 gold projects in the world. And given that it's in a jurisdiction like Australia, that's an export-driven economy.
Yeah.
The fact that we have our environmental licenses, both territorial and federal, we have our mine operating permit, we have our water use permits. You know, literally, I think we could write a letter and we could be in construction in 2 or 3 months' time.
So it's sort of tied up in a bow for someone if they wanted to.
It's ready to build.
Yeah. So, and when anyone measures this, so they're measuring it on obviously what contained metal, amount of ounces in the ground. But again, with the gold price doing what it's doing in terms of your recoverables, in terms of your payables, and whatever the metallurgy is, what are the margins like on something like this with a new project?
Well, you know, our all-in sustaining cost at the large scale was about $960 an ounce.
Okay. Wow. Okay.
So that's $2,000 margin.
So it'll
more or
drop
less.
a
And the
little
smaller.
bit, right?
We don't know exactly what that cost is going to be,
Yeah.
but in my mind, I think that we're going to be somewhere around $1,300.
Which is very comparable to world average or global average, I think.
Yeah.
At this time. Okay.
Yeah, it's still a
making
very
money.
good number.
Yeah. It was
Still a very good number.
And we're USD.
We are
USD. Okay. Good. It's just sometimes people measure
that's
things in a
important
different way. Yeah.
To make sure we're not talking Canadian or Australian.
Yeah. Okay. So if we're coming back to kind of if you go ahead and build this thing, the money. Do you think there's money available for projects like this in Canada on the capex side of things? Or are you going to Australia, or do you think there's interest from the US? I mean, here's stumping up the cash.
You know, obviously it's an Australian project. We focused on Australian debt sources.
Right. Okay.
There's what we call the Northern Australia Infrastructure Fund, NAIF. Yeah. You know, they would come to the table as part of the debt package. There's banks like ANZ, Macquarie's.
Yeah, the usual suspects.
There's U.S. institutions that would participate on the debt side. Equity, given that we have listings in the U.S. and Canada, most likely that the equity will be based
North
here in
America
North America
at some point. Yeah. Okay. Interesting. Because I find it sort of an intriguing environment where you've kind of got this whole kind of U.S. gold fervor, gold bugs everywhere. Americans love the gold. Do they understand Australia enough?
I think more and more so. Yeah. We don't face much opposition or concern or skepticism about the jurisdiction.
Yeah.
I think that many North American investors recognize Australia as a very well-established mining jurisdiction.
Okay.
And even to the point that some people will say, gee, it sure seems like Australian stocks outperform North American stocks in the gold sector. And
yeah, time of day. Yeah. It's fun. But well, I guess where we're going with this one is like, okay, you kind of got the Canadian and the US listing, but does this thing need to trade in Australia to be understood to give you the liquidity, or do you think, because there's very few Canadian companies with Aussie assets, like very few, and they do okay, but they usually get taken out. That's the kind of gameplay here. So, yeah.
We jokingly say that we don't have enough shares issued and outstanding to be listed on the ASX.
Right. To play that game.
But at some point,
yeah.
At some point, I believe that there will be an ASX listing, and the time just isn't right. But that will come.
Okay. Well, let's get back to the feasibility stuff, if you don't mind. So you've outlined some of the kind of key deliverables in the next 4 months or so.
Yeah.
All funded. I get it. What are the kind of things that worry you, or the things that you said to say, like, we got to get up and stay on top of these components?
Honestly, I think that Maria Vallejo, our Director of Projects and Technical Services, is doing an absolutely fantastic job of staying on top of all of those things. It looks like we're going to have the resource estimate completed on time.
Okay.
The mining people are ready to go. The process engineering people are already at work. It really starts to come down to crunch time in the middle of May. The last 6 weeks of tying everything together, making sure that all of our cost estimates are in, getting the model refined. That's when you really, you can track all this work and you can track your costs and you're hitting milestones, but really as all the costs start to come together,
right,
that's when it gets to be crunch time. But right now, I think we're within a week of being just spot on where we want to be. So I'm Maria and I talk on a regular basis. She provides me updates, and I'm honestly not worried about any particular part of the study today.
Okay. Okay, and as you said, at that point, you would hope that you've had a good few days since you've been here, but you would hope there's a kind of reaction in the market and said, right, we now understand why this thing is doable. We now understand why it's better at this scale. It's profitable. It's attractive, right? These are things you need the market to believe when they read this feasibility study.
Absolutely, and we're gonna be on the road to tell this story after we announce it.
Okay.
To help people understand why it's all of those things, why it's good for the development of the project, why it's more attractive economically, why it's more attractive from a construction operation point of view, why it should be more appealing to a potential partner. Why ultimately did we do this? When we did it, because we think it's the way to create value.
Yeah. Do you wish you'd done it sooner?
That's an interesting question.
I don't think it's the right answer, by the way. So,
that's one of those things that I think that every head of a company looks back and second guesses decisions.
Yeah.
I've jokingly said that one of the mistakes we made with Mount Todd was we let it get too big. We in 2013, we made the decision that that the optimal size was 50,000 tons a day.
Yeah.
And maybe even back 12 years ago, we should have been thinking a little bit smaller. Maybe.
But I think it was a Canadian mentality. Certainly when I got into the junior side of mining, when I was in banking, it was big as beautiful, right? Well, you're encouraged to be that.
Yeah. Well, you have a big deposit.
Yeah.
You build a certain size operation, and we were targeting having a senior producer come and take it out.
Yeah.
Doesn't happen.
No, well, for this time and for this market, for sure, I think you've done the right thing. So I appreciate you coming in, Fred.
Absolutely.
And
thanks for having me.
Get up with the rest of the week. Sure, really good.